Sige, go po. Audio chat na po kay Sir Steven. Ayun na.
Hi, Sir Steven. Good morning. Just
Hi.
Good morning, you're watching Businessworld Live. I'm Dani Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day Thursday. Is the country's debt, which already surpassed the international threshold, a cause for concern? The World Bank says the government's debt remains manageable.
The minimum fare for jeepneys has increased by ₱1 to 10 pesos, but this might do little to help the transport sector as the Energy Department says another round of oil price hikes is possible next week.
The country's dollar reserves fall for the third straight month in May.
And we may be just 6 months into 2022, but the BPO industry has already hit its employment and revenue growth targets for the year. We begin our broadcast with the World Bank assuring the public that the Philippine government's debt remains manageable.
That's despite the outstanding debt reaching the internationally accepted sustainable threshold for developing economies. The World Bank explains most of the country's debt is long-term, domestic, and peso-denominated. The country's debt-to-GDP ratio currently stands at 63.5%. That's higher than the 60% threshold considered manageable by multilateral lenders. The national government's debt has ballooned to 12.76 trillion pesos as of end April, with 70% of this debt sourced from domestic lenders. The World Bank stressed the need for a fiscal consolidation to help address high debt ratio. Last month, the Finance Department unveiled a blueprint which aims to raise an average of 284 billion pesos every year for the next decade to repay the additional 3.2 trillion peso debt incurred during the pandemic. And speaking of the impact of the pandemic, Finance Chief Sonny Dominguez says it may take the Philippines at least 10 years before its debt-to-GDP ratio returns to the pre-COVID level of 40%.
Now, the LTFRB has approved the recommendation to increase the minimum fare for public utility jeepneys to 10 pesos. That's starting today. Although this fare hike will be implemented only in NCR, Central Luzon, and Calabarzon. In an interview with The Big Story, LTFRB Executive Director Maria Cristina Cascion explained they made the decision in response to the soaring prices of petroleum products in the country.
We cannot be insensitive to the clamor and plight of the PUP operators ngayon who are responsible in ensuring the steady of supply of public transport services. Nakikita natin on the ground na kumukonti na po talaga yung namamasada dahil gustuhin man nila, hindi na din nila kakayanin dahil sobrang taas po ng fuel prices po.
However, this fare hike rate might do little to help the public transport sector. This as the Energy Department warns that another round of pump price increases might happen next week.
Ni trading o sa global trading o sa market nakikita natin at medyo pumapatak na medyo tumaas. And this is average for the week and mag-take effect yan next week.
Now, prices of basic commodity goods continue to rise, with some vegetables even seeing a 100% increase. In Nepacu Mart, a kilo of onion now costs 80 to 120 pesos from 50 pesos previously. There are also huge increases in garlic, beans, and cabbage, and many other fresh goods. Meanwhile, a kilo of chicken now ranges from 180 to 200 pesos from just 150 peso per kilo previously. A kilo of frozen pork also increased by 25 pesos. Other products such as sardines and evaporated milk also increased its cost by up to 3 pesos per can, while a kilo of sugar went up by up to 5 pesos per kilo. Now, despite the higher prices, some consumers continue to buy grocery items in convenience stores. The Trade Department explains that the suggested retail price is not implemented in these stores.
Hindi na natin ini-impose sa kanila ang SRP. And you're right, sila na ang magpapresyo nun, discretion na nila kung paano ang kanilang add-on or markup dun sa produkto because of the cost of operations naman. At saka kung saan nila kinuha yung produkto and then i-add mo lahat yung mga yung cost ng pagpatakbo ng maliit na store na yon.
Now let's check in on the prices of goods in groceries and supermarkets and if the recent spikes have affected their performance. To answer that, we have Stephen Kua, President of the Philippine Amalgamated Supermarkets Association. Sir Stephen, good morning. Thank you for joining us.
Good morning, Jess. Danny, hi.
Again, sir, which products have had noticeable increases over the past few days or weeks even? I mean, after the fuel price increases, we have some goods already at least having some spikes here. And should we be bracing for more increases in the next few days or weeks even?
Okay. Prices have been increasing even since the end of last year, no? Because for 2 years during the lockdown, nobody dared increase their price. There was no demand. Okay, so now that prices have been increasing continuously every month, no? Do we see an easing of these price increases? Oh, I don't think it looks good that fuel prices will be increasing again. You just mentioned that LTFRB has approved a 1 peso increase in commuting, no? So I guess we see that prices will continue to rise for some items. Again, it's not the same item which increases its price, okay? It's a merry-go-round. That's what manufacturers do these days, okay? If I have 400 items, I'll increase, the 40 items first this month, another 40 probably next month, 50 the following month, and then if those increase in price during the first month is not enough, I'll increase it again after, let's say, 5 months. No, so it's a merry-go-round, staggered basis, just so people don't feel the pinch. One time, big time, all items increased all at the same time. So do the shoppers have a choice? They do. But now it's a bit more difficult to look for the items which have not yet increased in price or have increased in a lesser way than the others have increased their prices. Now, imported items have increased by a lot because of supply chain disruption, no? And shipping lines problems, no? So go for the local items, hoping that they've not increased in price as much as those which have imported raw materials or totally imported. Yeah.
Okay, sir, I wanted to nuance on that, no? Which items talaga? Because the fertilizer issue, of course, affecting the agricultural sector. So I was thinking it is the local produce na medyo mahal, but at the same time, you mentioned that the imported produce.
Goods.
What about, the canned goods that are manufactured locally? May difference ba in the price increases of that vis-a-vis those that are imported? Saan talaga yung price increases?
Okay, manufacturing has become a bit more complicated than just raw mats, produce and sell. Okay, some people do what you call repacking. No, when you rebottle or repacking in cans. No, they come in big volumes from abroad, and then they repack them in cans or in bottles. No, and these have seen a big increase. Okay, in price because these are imported raw materials, and I guess there are problems in logistics. No. Aside from the prices have increased from abroad and peso-dollar exchange too. So it's difficult to tell which items exactly, pinpoint, because if people can tell, then people would buy all these items, right? So it's a bit more difficult to tell now because it's hilaw na, hindi na katulad dati, na very clear. This is imported totally, line and sinker, or this is local, totally. Even the can is imported, right? So you can't say anything. It's all partially imported, put together, and partially local content. So it's very difficult to tell which items have gone up and have not because the dynamics have changed and it's pretty complicated. You cannot just pinpoint and say, let's go for these items and not those items.
But generally, as you mentioned, broad-based increase, almost every item.
Now, has that also affected foot traffic in the supermarkets in your stores, at least for your members, and has that also affected your revenue?
Oh, but traffic has increased after alert levels have been eased. No, however, I think people go more for restaurants, food, and recreation. No, you can see that the destination spots, vacation spots outside Metro Manila, Tagaytay, Baguio, they're full and the traffic is heavy. No, even getting to these areas. No, because people have been locked down for so long, so they crave for a little recreation and then food aside from online ordering now food. No? Supermarkets, people have been going there even during lockdowns, no, in a limited way, but they have been going there, but not those other establishments I mentioned. No, so foot traffic is heavy on the malls. In supermarkets, yes, but not as much as compared to. How about online? Online, I guess with the alert levels easing, I guess online might not be growing as heavily or as in good quantity from the previous year.
I want to bring up a question on that one. How do you compete with online platforms, especially those which actually offer cheaper alternatives? I mean, a number of them even offering discounts and vouchers, and a number of consumers opting to go for these online platforms considering na medyo makakatipid sila compared if they go to supermarkets.
Okay, here's the thing. There is no one channel, be it online, offline, supermarkets. There is no one channel which gives you everything cheaper. Okay, they have to earn it back somewhere, right? So you just have to be shop in multi outlets, no, or multi channels, no, offline and online, no, for certain items which give you the best value for your money, no. So you might think that this is cheap in online, but they might add a bigger profit margin somewhere else. They have to earn it back, right? So unless they're able to get good deals from manufacturers, then they'll be able to offer it to you very cheap. No? That's a thing. When you go online or when you go to a supermarket, you think everything is cheap inside the supermarket just because you see that there are two items which are cheaper, right? They're called loss leaders, no? But they have to earn it back somewhere.
Okay, sir, what about the more premium segment? Is it more inelastic? Because for instance, in the alcohol sector, the premium beers, people are paying more actually, and the demand has actually gone higher. So is that the case for other products? Na the higher income segment bracket are buying more?
Yes, that is correct. Whatever happens to an economy, for those who are well-to-do, it doesn't hurt them that much. Okay, but I did ask these stores which cater to that market. I said, are people buying more during paydays since these people don't have to rely on salaries, on immediate salaries to shop? And yes, I think it's a cultural mentality last minute. No? So nakikisabay lahat, no? Kahit na may kaya, hindi ba paydays pa rin namimili. So it's a cultural thing, I guess. No, but those who can afford, they can buy online, they can buy offline. Price is not a problem.
Okay, lastly, before we let you go, Sir Steve, what do you think is a challenge here for the incoming Trade Department? I mean, incoming Secretary Alfredo Pascual did mention that he is open as well to further expanding the list of goods covered by the suggested retail price list. So your thoughts on that, and how is that going to affect supermarkets?
Expanding the list of SRP is not going to help, if you ask me. SRP is supposed to be used during calamity, not the whole year round. No? It's clamping retailers, it's clamping manufacturers, no? When you say clamping, controlling them, no? That you cannot increase prices, no? There will be new players who will come in and they'll be able to topple these market leaders, no? Because DTI is monitoring only the market leaders, okay? That's our 250, 300 items, no? In their SRP list, and they want to expand it to 500, we'll end up a communist state wherein there's price control, right? Laissez-faire, free enterprise. That's what we're supposed to encourage. As USEC Ruth mentioned a while ago, convenience stores, you're allowed to price yourselves the way you needed to because of your cost of operations. anybody who prices themselves out of the market, any channel, supermarkets, hypermarkets, no, if you price yourself out of the market, you're gonna lose in the end. No, nobody's gonna buy from you, right? Because everyone's gonna figure out, hey, this store is 10% more expensive than the other store just a block down the road, right? So let it flow, free enterprise, no? People will be pricing in accordance to the market that they sell to. Anyway, that's the market is happy with those prices. That's why they're buying from your store.
All right, free enterprise here from Stephen Kua. At least thank you very much for your insights this morning. Again, Stephen Kua, president of the Philippine Amalgamated Supermarkets Association. Thank you, Stephen.
And here are other stories we're keeping our eyes on. Exports rose less than expected in the month of April. Newly released figures from the PSA show that exports climbed 6% in April. This is a bit higher than the 5.9% growth in March, but lower than the 12% average estimate given by economists to Bloomberg. Imports for April, meanwhile, grew by nearly 23%. That's down from almost 28% in March. The trade deficit narrowed to $4.77 billion from $5 billion in the month of March.
The country's dollar reserves declined for a third straight month to over $103 billion in May. Month-on-month, gross international reserves fell by more than 1.5% from the $105 billion in April. This is on the back of higher foreign currency withdrawals to repay debts and lower valuation of the BSP's gold reserves. The level of dollar reserves as of end May is enough to cover more than 6 times the country's short-term external debt based on original maturity. Ample foreign exchange buffers protect the country from market volatility and ensure that it is capable of paying its debt in the event of an economic downturn.
Now, 6 months into the year, and the BPO industry has already achieved its employment and revenue targets for 2022. The IBPAP says it is now ahead of schedule on its targets of having 1.4 million full-time employees and $29 billion worth of revenues. Now, IBPAP President Jack Madrid says this marks a resurgence for the industry. He attributed the upsurge to pent-up demand from global customers, higher confidence in work from home setups, and growth in emerging sub-segments.
Pausing for a quick break, but coming right up after that. We'll check how our local bourse is performing this morning after the index managed to climb higher on yesterday's trade.
More of that and other stories when Business World Live returns. Stay with us.
All right, Dan, one day to go before the weekend. How is the peso reacting to that trade deficit figures we had this morning?
All right, just one day to go. All right, now as you can see, the peso is weakening a touch. So, green here means that we've gone higher and closing in on that 53 levels. Of course, even as the trade deficit has narrowed, that comes at the expense, of course, of our exports not growing as much as we had hoped. Now, moving on to some developments on the index front, you can see us sliding down 0.4% to 67.43. This as they have raised the minimum float for index stocks, Jess. That will be 20% from the 15% currently, and that's going to start from December as the index gets a review, according to PSE President Ramon Monzon. Now, he is saying that this is going to be used to revive the liquidity, which is one of the least in the rest of Asia. Another, update from Monzon is that they're looking to amend the local REIT laws to allow toll roads, hospitals, power plants, and even logistics companies to be listed at REITs as REITs. Just so looking forward to that. Another is they are looking at fintech payments systems to be allowed to trade some stocks on the bourse, and he's also hopeful that short selling will be approved by third quarter of this year. Now, here to chat with us about that and other updates, we have with us Japheth Tantiangco of PhilStocks. Hi, Japheth. Welcome back.
Good morning, Ma'am Danny, and thank you very much for inviting me on your show.
All right, so let's talk about some new developments here at the bourse. So you've got the minimum 20% float, at least for the index stocks. Retail participation hopefully increasing. It's ano lang pala, Japheth, 1.4% of the population lang is into retail investing in our stock market. Tell us, how will these things improve, let's say, the activity that we've been seeing so far?
Well, those that have been mentioned a while ago, they're positive developments. But by the end of the day, participation in the local bourse, it will still depend on the developments. Of course, it's going to depend first on the developments with respect to the overall macro picture. Currently, if you're going to look at our daily value turnover, at least in the past 6 days, it hasn't been getting past 6 billion. So we have poor value turnover currently,
right.
And this is attributed to low confidence. I can say low confidence towards the market currently, given the factors at play, from the offshore headwinds such as the monetary tightening of the Federal Reserve. We don't know yet up to how aggressive they can be. So investors are going to watch out for that upcoming CPI data from the United States. And then you have the Russia-Ukraine war. We don't know how long will this last. So we don't know as well up to how much oil prices will climb. So this is another worry for investors. We have the lingering effects of China's weakened economy. And here onshore, of course, you have inflation expectations. You have of the local currency, and you have our elevated debt levels. So these factors are play. So these are clouding sentiment. So because of these, investors are for now are staying outside of the market. So that's the biggest problem that we have in terms of trading participation. So we need to see improvements in those. Yeah.
All right. So, of course, a lot of fundamental issues to be tackled, not just some technical, limits here for the bourse, as you rightly mentioned. But, Japheth, now that there is, I wouldn't say clarity, but there is more direction in terms of monetary policy, it's almost sure that there will be 2 rate hikes by the end of the year at minimum. Does this quell some concerns of investors when it comes to at least inflation and consumption?
Well, I would say that is a faster than expected move from the Bank Central ng Pilipinas. It's quite aggressive. Before, we were only pricing in 1 rate hike for the month of June, and then the succeeding one will already be on the latter half of on the latter part of the second half of the year. But for us to have 2 successive rate hikes in June and in August, so I can say that is a bit fast. Though it's good, yes, it's good in terms of tempering inflation expectations. it's good in terms of expediting the decline of our inflation in the medium term. But of course, it brings a new set of worries. Will the economy be able to handle such a fast-paced hiking of rates? So that's another concern that investors are contending with right now. How will it affect the fast-paced rate hikes? How will it affect the economy, which is still which is still in its recovery stages from the pandemic?
Okay, now moving to offshore, as you mentioned, trade figures just came out. Give us an idea of, this is disappointing when it comes to, of course, the export sector, but at the same time, the deficit did narrow. What's the reaction here that markets are going to be, or does this even matter to investors at the moment, given all of the issues that we are, as you mentioned, seeing?
Well, that's going to be an added concern. Okay, but the weakening of exports, it just goes to show the fact that our global economy is currently weakening. So as mentioned, you have rising prices of raw materials, you have supply chain disruptions, you have the lockdown, the recent lockdown in China because of their COVID-19 situation, and you have tightening of monetary policies in advanced economies led by the United States. So these are tempering the growth prospects of the global economy, and because of these events, so global demand is weakening, which in turn is somehow slowing down our exports, and this trend may continue moving forward. And because of that, if exports will continue to slow down in terms of growth while imports remain as is, then our trade deficit is going to widen. And if that's going to happen, then of course that's negative to GDP. So it's going to negatively affect our economic growth. The fact that this is going to, weaken our external position. If our trade deficit continues to widen, and if it's not matched by an inflow of investments, then it's going to, have a negative impact on our balance of payments. And of course, that's going to, to lead to higher debt. And at the same time, it's going to weaken our local currency. So the trade figures that we're seeing right now, if this continues, then it's also going to be an added concern to the course.
All right, so a lot of concerns, as you rightly mentioned, keeping investors on the sidelines is, of course, as our index continues to trade at 6,700 levels. Thank you so much, Japheth Antianco of PhilStocks.
You're very much welcome.
President-elect Bongbong Marcos will attend the APEC summit in Bangkok, Thailand in November. Marcos Jr. was personally invited by a ranking official of the Thai embassy on Monday. This is going to be Marcos Jr.'s first meeting with other heads of state as Philippine president. The annual summit will be conducted in person, the first in 4 years. The 2019 summit in Chile was canceled due to protests, while the event in the past 2 years were held virtually due to the COVID-19 pandemic. And that's a first look into the business day this Thursday, June 9, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.